Yeah, so actually, for the most part, you should ignore macro. So, going back to my example of the McDonald's franchise and Ford dealership, etc. There is I live in Irvine, California. There is a McDonald's, which is, 3-4 miles from my house. And recently they made their drive-through 24 hours. So actually, you can't go into the restaurant 24 hours, but you can drive through and pick up stuff anytime, 4 a.m., 3 a.m., anytime. And in fact, so that McDonald's is so well run and does so much business. So what is the impact of any of the factors that you are talking about on the cash flow that McDonald's will produce this month or next month or next year or 2 years from now or 5 years from now? Is irrelevant. So I've always believed that the micro in many, many ways trumps the macro. And so if you were looking, let's say that McDonald's came on sale and, let's say it came on sale for $5 million, for example. And let's say your family had a net worth of $10 million. The question is, is that an asset that you would put $5 million into? And let's say it was producing, $400,000 a year in cash flow, for example. So it's, at 12 times cash flow or something. So, the question you would ask yourself if you were looking at that sort of a transaction, you would ask yourself, well, how long can that $400,000 a year in cash flow continue? Can it increase? What will affect it to go down, etc.? And so it would be factors around that McDonald's that would dominate that discussion. It is completely irrelevant what the Fed policy is and completely irrelevant what exchange rates are and all these things. All those things become irrelevant. And so as an investor, you're always better off focusing in on the business because the eventual results of the business, 90% of it will be from what happens inside the business. And so I would say that when I look at the McDonald's as an example of a wholly owned business you can buy, the same thing applies if you're looking at stocks, is you have to look at it as if you're buying the whole company. So the first thing I would ask is, someone mentioned the stock price of Infosys. What is the market cap of Infosys? Anyone know the market cap? I'm sorry? 1.4 lakh crores? No, I'm sorry. Okay, so anyway, I can't give what to say, but let's say there's a company in India that has a market cap of, let's say, 5,000 crores. And let's say the stock trades at, let's say 200 rupees. I'm really not interested in the 200 rupee price. I'm interested in the 5,000 crores. So the question I would ask myself is, if my family has 9,000 crores or 8,000 crores in total assets, will I put 5,000 crores into this company and be happy to own it for 10 years? And if the answer is no, which is probably the case, then I'm not interested in buying one share at 200 rupees. So those are the types of questions that an investor should be asking is if this were 70% of my family's assets and I could not sell it for 5 years, would I buy it? And I think if you just ask that question, that will save you a lot of trouble later on.